Hi guys. So today I'm going to discuss about how to analyze an income statement of banks, but predominantly investment banks. Investment banks, being into the complex business, sometimes it's a little tedious to analyze their income statement. So today I'm going to discuss, what all areas that you should be looking at as a financial analyst. If you were to analyze any investment bank's income statement, what are the areas and what are the components that you should be looking at? And to go ahead with the example today, I will be taking Goldman Sachs into consideration. So I'll be walking you guys through the Goldman Sachs financial statement, rather the income statement. So here I have Goldman Sachs consolidated statement of earnings. This is according to the IFRS, considering the income of all the foreign subsidiaries that they have earned. Now, let's get started. The first aspect that I'm going to look at is the revenue, basically. Now, let's jump onto the revenue numbers, which is given out here, which is like 29 billion, 28 billion, 30 billion. Now, understand as a company, as an investment bank, how Goldman Sachs is making its money. So if I look at the first domain, it's because as an investment bank, you take any investment bank, you take Goldman, you take Morgan, Credit Suisse, Deutsche, whatsoever. So these players, they have multiple revenue streams to make money from. So if I look at out here, I see there are around about 5 areas where Goldman Sachs is making money from. First is investment banking, then the investment management, commissions and fees, market making, other principal transactions. Now, investment banking domain will include the basic investment banking functions like, the equity underwriting, the debt underwriting. Investment management is basically kind of a portfolio management that they are into. Commissions and fees for all the deals that they crack, the OTC deals like M&As and IPOs and so on and so forth. Now, then we go ahead one by one and try and understand, okay, so how the performance has been as far as 15, 16 and 17 financial year are concerned. So if I look at the numbers out here, the numbers look, it kind of looks okay to me. I do not see any kind of shoot up in the revenue. I think it's kind of stagnant, more or less from 2015 to 17. So for the last 3 years, so the bank has been actually meeting the benchmark, I would say. So if you look at here, it was 7 billion. Now here it's 7 billion. There's a little drop, but that's okay. That's a minimal. It's a marginal, by the way. So the bank has been able to kind of meet that benchmark. We really don't know what was there in 2014, but for last 3 years, I think they've been doing kind of okay, I would say. So now, so investment banking, they've been into the same figure of like 7 billion around, which is okay. Now, what I here wanted to guys tell you is, how can you do this analysis? Like, this is a standalone financial statement. Okay, Goldman Sachs being the number 1 investment bank in the world, you can probably do a competition analysis or competitor analysis, wherein you can actually try and map these revenues or try and compare these revenues with other investment banks like MS, Deutsche Bank, then Credit Suisse, or maybe for that matter, BofA and all that, So once you understand that, is there any other bank, is there any other investment bank which is making more revenues than Goldman Sachs? You can do the comparison between the companies, which is called as the industrial comparison. And that's how we can understand, if the Morgan is making more money than Goldman Sachs, then what is wrong that Goldman Sachs is doing, or what is good or what is the best strategy that Morgan Stanley is following, which is why they are making more money than the Goldman Sachs. So that's how we can do the comparison, which is bank to bank, which is like in the same industry you take 2 banks. Now here what I'm interested in is the market making. Now this is a little it's kind of a new concept for a couple of you guys. So market making is basically, these are those deals wherein Goldman Sachs has taken an initiative as far as the forex is concerned, as far as the OTCs are concerned. Selling out those OTC bonds. So the OTC bonds are there, which is nothing but a financing. If they were to finance a company like Apple or like Microsoft for the big loans, like for like 10 years, 15 years, or 20 years. So the OTC bonds, then you have CDSs, credit linked notes, the IRSs. So all these transactions wherein Goldman Sachs gets into picture, and these are like transactions that happens in like billions and trillions. These are basically called as market making, wherein Goldman Sachs as an investment bank creates market, lends money to the other banks, to the other financial institutions, or even to the other corporations in the world. Fine. So market making is something new. You will find on the investment bank's financial statement, income statement predominantly, which is not kind of, the kind of what do you say, this point, or this factor you will not see on any other industries, companies' financial statement. Fine. So market making is one of the important function of investment banks, because they cater to the needs of finance, to the financial institutions and other corporations in the world. So that's the main job that they have. Fair enough. Other principal transactions, though the number look quite huge, like it's around about 5 billion, so we will not get into this. So other principal transactions, what you can do is you can check out the annual report, and in the footnote you can kind of go ahead and understand what other principal transactions that the company has dealt with. Now these are not the regular the header. I would say the header is a good word, by the way. So this is not the regular income item. You may see it, or you may not see it in one of the year, by the way. But yeah, the first four, like investment banking, management commissions and fees, and market making, these are predominantly four main sources of earning its bread and butter. Okay, fair enough. Now we will not get into the numbers, how they have done, and we will not check the annual report, because I want to keep this session short and sweet. Just want to give you guys a little heads up as far as the investment bank income statement is concerned. The second thing I should be looking at is the total revenue, which is okay. I've already made a comment on it. Now if you look at it, it's a bank, right? And it's not a normal bank, it's an investment bank basically. So how they are different than the commercial banks? So basically investment banks do not take deposits. The commercial banks do accept deposits, and there is a credit creation that happens in commercial banks. Now as far as Goldman Sachs, like as far as investment banks are concerned, the first thing that you should be worried about, or rather you should be looking at, is the interest income. Okay, so this is the point out here. So if you look at interest income, yes, there is a quite good growth as far as interest income is concerned. I'm looking at this point out here. So it's 13 billion in the year 2017. It means they have done more business. So this can be a collateralized transactions that they had. This can be interest earned on the securities. This is the interest earned on the securities in which they have made an investment globally or whatsoever. So this shows the income that they have earned. Now what interests me, or what is to my surprise, is the interest expense. Now for the fact the company is eligible to make money out of the investments and the kind of transactions or the deals that they are into, in the same way they are also liable to pay some interest expense or some interest to the counterparties. It can be any it can be a repo contract, it can be a collateralized contract, it can be a CDS contract where they are paying actually the money is going out, they're paying to the counterparty as an interest. That's okay, that's still okay. You can find these things in the footnote, or you can find these things in the annual report. What interesting is out here, if you look at these numbers like 5 billion, 7 billion, and there is a good jump from here to here, it's around about 50% approximately. So they've made, rather they have given more money out. If I look at the interest expense, this row out here, they've given more money out. Now this is where it should ring a bell that okay, I see 5 billion, I see 7 billion, then I look at an amount which is like around about a 10 billion. Now this is a real good growth. So why it's actually giving a lot of income out? Like if you look at the NII, the net interest income, it's just like close to 3 billion. Okay, now let's assume like had this been in the range of 7 billion out here, okay, if I put $7 billion out here, my NII would have shoot up, right? I would have been making the GS would have been making around about say 6 billion as NII, which is one of the most important factor when you analyze any bank. So you're making around about 13 billion as the interest income, and you're paying around about 10 billion as an interest expense, which is around about like 80% of your total interest income. Now this should ring a bell. Now if you go back and if you check the annual report of Goldman Sachs, to my surprise, according to the new laws in the US, now the investment banks are allowed, or they are eligible to accept deposits. Yeah, so they do accept deposits now, and on those deposits they are actually giving interest back to the corporates or back to the retails and all that stuff. So you can go back to the annual report and you can check. So this is something that you should be looking at. Like, is there any other bank who's actually accepting this interest? Now this is nothing new, to be very honest. If I look at Deutsche Bank, right? So what Deutsche Bank has, Deutsche Bank has one segment as an investment bank And Deutsche Bank also has something called as retail bank. Now, when I look at the consolidated statement of the company, definitely the retail bank, that means you are catering to the retail, retail customers. You are bound to give interest back to them on your deposits. You're bound to give interest back to, the money that you've got from the retail investors. So it's a retail bank plus it's an investment bank. It's a combination of both. But when I look at Goldman Sachs, I was really surprised because you're a bank which is like investment bank. You don't have any retail segment as such. But to my surprise, I mean, looking at the changes in the laws, now they are actually accepting deposits on a very normal level, not on a higher level. But this is something, a new business opportunity for a business, for a company like Goldman Sachs. They can have a good amount of money, a good amount of liquidity with them. Fair enough. So that's it. That's what you look at. You look at the NII, which is most important. Looking at the NII into picture, I think the company has done quite well, being stagnant for last 3 years. Now this whole part is basically all about your revenues. What are the areas that you're making your revenue, and how much is the interest that you're earning, and how much is the interest that you making. Okay, fair enough. Now then comes with net revenue, which is here, the net, which is like including the net interest income and everything. So you have this 29 billion out here plus this 2 billion out here. That gives you $32 billion in total. Okay, fair enough. Now let's look at the operating expenses. This is one of the important points because see, in a company which is in this scenario, if your revenues are not actually increasing, exponentially, then you make sure that you take care of your cost. So if I look at the normal, kind of formula, so revenue minus cost is nothing but your gross profit. Either let this go up, or if this is stagnant, make sure that this goes down. Right? In any kind of a function. So the whole purpose is that my gross profit should my gross profit should go up. Now, if the revenues are quite stagnant for last 3 years, I would expect Goldman to kind of take care of their cost. Now, these are the cost headers that you see out here. Now, let's have a look at one by one. So, if I look at operating expenses, what I have here, like compensation and benefits, brokerage. So, this is normal, that's okay. Market development, that's okay. Depreciation and amortization is basically on the plant and equipments and all that, the retail that they bought. That's okay. Now, if I look at the numbers out here, the first thing that I check is, this is around about 12 billion. Now, that's something, compensation and benefits. Now, if you look at, guys, out of this 32 billion out here, comp and ben constitutes $12 billion, which is round about 1/3. That's huge. That's huge. But again, it's a service industry, right? You got to pay your traders, you got to pay your sales team to make money. But again, I think this is something, they can take care of. So this cost head, they can take care of. I mean, looking at stand alone statement of Goldman Sachs, it cannot be a good analysis to, make a comment on their compensation. And as I said, you have to do an industry analysis. You got to see how other banks are paying as far as comp and ben is concerned. But looking at Goldman Sachs, I think they're a good payer in the market. They pay a little hefty. So if you look at 12 billion, I think that's something, that is something can be raised to the top management in the financial analyst calls and all that stuff. Okay, that's okay. So comp and ben is the one thing that you can kind of highlight. Then you look at professional fees. The professional fees is, okay, it's round about, that's okay. Other expenses. Now, this item is not regular, but if you look at Goldman Sachs financial report, I think it's an expense that they incurred on RM based deal, and they've been incurring this from last 3 years. So this is something that should be checked by the analyst. Okay. Now these two components you can see, which constitutes round about 14 or 14.5 billion of your entire expenses, your entire operating cost. So what's your gross profit out here, which is, so that's around about 21 billion. Again, the number looks okay because it's not kind of a high growth and all that stuff. Okay, now if I go little down, I have pre-tax earnings and I have provision for tax. Okay, here you should be a little careful because look at these numbers here. I'm looking at this row. So you've got round about 7 billion, you've got 3 billion, you've got 2.5 billion out here. Now here, there is a good increment. So you were 3 billion and then you are 7 million as far as your provision for taxes is concerned. So you are you jump, it's double the tax much you paid last year in the year 2016. Now if I look at this, if I look at the total, okay, now where's the total profit? Okay, if you look at the total profit, all right, before we go ahead, let's just understand, why this $7 billion as a tax. I mean, this looks quite abnormal, and this is like, this is literally huge. Okay, let me tell you what's happening here. So if you look at now the corporate tax, the corporate tax, according to the new norms, it has gone down. But what the Trump administration has done is, they said that, okay, what are foreign subsidiaries that you have, okay? You've made money via foreign subsidiary. So now there is something called as repatriation of your profits. Okay, so what the administration says is, you bring back the profit earned from your foreign subsidiaries and you pay us one-time tax. Okay, you pay us one-time tax on the earnings, including your main branch and including your all the foreign subsidiaries, and you do that in the current year, and then the next year onwards you pay the minimum corporate tax which has been agreed, which is around about 21% to 22%. This is something need to be checked. I may be wrong out here, but as far as the new administration rules are concerned, what they're saying is that you get all the money back to the US, you pay one-time tax on it. It's a one-time settlement, and later on you pay only a minimal corporate tax which will be applicable from next year onwards, which is 2018. So I'm looking at 2017 now. And that is the reason, if you look at, there is a good jump from 3 billion to around about 7 billion, which is like more than the double. Now, if you look at, this is something called as effective tax rate. Effective tax rate. Now, the effective tax rate ratio, if you were to calculate, what you should do, you should take this amount, which is around about 7 billion, and you should look at this, rather the ratio should be, the amount should be compared to this earning, which is out here. Let me just point it out. So this is around about 11 billion. So 11 billion. So 7 on 11, which is around about 61%. So if you look at this ratio is 61% to 62% approximately. So they have paid this much of money. Again, why there is a jump? Why this is a huge jump? This is because the new rules of repatriation of profits. See, ideally you will not see effective tax rate. Effective tax rate you can check in annual report also, but it's your duty to kind of calculate. You cannot trust the annual report 100%. So effective tax rate, you will not see such a huge number in the annual report in a normal business days. But this is an exception because they want to pay one-time tax, and later on they want to enjoy the lower tax percentages. Cool. So if you look at your net earnings is around about $4.2 billion. Now that's something reduced exponentially. Like this is a quite huge downsize. Again, like you see, this is 6 million to 7 billion. That's the range. But why there is a downsize? So this is justified, right? This is not something happening because of the management's fault. The downsize that's happening in your net profit or your net earnings is because you're paying here around about a $7 billion tax, because of which you're taking a hit one time. But I think I'm very sure, like if you look at 2018 financial statements, Q1 of Goldman Sachs, you will see there will be a jump in the net earnings, because now onwards you're going to pay lower amount of tax. Cool, guys. I hope this helps you. Have a look at Goldman Sachs income statement. If you have any problems, if you have any questions, anything, any doubts, do write it down in the comments. And tune to my channel. You can subscribe to my channel out here. I'll be putting up a lot of videos of the same sort, wherein I'll be talking about the cash flow statements and the balance sheets. If you have any doubts, you can get in touch with me. And yeah.